every year crypto adopts some concept from Web 2. So like this year it was revenue, and like maybe next year it'll be customer acquisition cost or whatever. But there's all of these learnings from the last few hundred years of business. I feel like many of which have been ignored, maybe for the best, but I do think there's a lot of wisdom out there that has yet to be applied. Back when we started in crypto, a lot of people were trying to get a ball rolling that over time would become the next thing, whereas today people are focused on basically like industry, making revenues, bringing real world assets on chain, things like that. As that happens, the teams become more and more professional. And if you think about like what's the role of like a management team of a large organization, it's kind of to hold on to that really strong position. A lot of teams that have had that in the past maybe haven't had the DNA around keeping it.
When we look, 12 months into the future, right, as an industry, what do you think is maybe 1-2 trends that are going to be, everyone's going to be talking about that today no one's speaking about or thinking about?
Midterm elections.
Hello, everyone. Welcome to zrTalks episode 6. Today we are joined with Walker Guffey, founder of Hellomoon. Walker, how's it going today?
I'm good. How are you?
Doing well, man. Doing well. So maybe it would be great to hear a little bit about kind of your background and how you even got into crypto in the first place.
Yeah, absolutely. So before I founded the company, I'd had a pretty heavy finance background. So I did banking for a few years after college and then worked in private equity, basically software investing for almost a decade, which was a phenomenal experience. I kind of got to learn how companies are constructed, how you go from, 10 million of ARR to, much bigger. And so had an amazing time doing that. And then ultimately kind of became interested in, how do I do that myself? So I started to get involved with boards of directors, things like that, getting closer and closer to the operations of portfolio companies, and then ultimately kind of decided to do my own thing.
Yeah, that's awesome. So tell us a little bit about Hellomoon, because you guys are in a lot of different lines of business. We know you through our relationship as a validator on ZR Chain, but you do a ton of different things. So maybe just kind of run through all the different interesting things you do and kind of maybe even like the progression of like where you started and how it's evolved.
Yeah, no, it's a great question. So we're focused on doing things that people value, which took a little while to learn. So we started out selling basically on-chain analytics for Solana, which worked very well at kind of the peak of the 2021 bull market. But it turns out that it's very hard to sell analytics in a bear market. Basically you look at it and it says, okay, well, there's no growth to be had. There's nothing that you can do. There's no hope out there. And so we realized that it was a little bit of a discretionary kind of, a little bit of like discretionary spend. And so we got basically closer and closer to real-time infrastructure, basically with the idea being that, in good times, you need a lot of it. In bad times, it's still needed. And so we kind of have this heritage, if you will, in complicated, data transformations, things like that, but now taken and applied to running real-time infrastructure. Validators, things like that, are almost kind of an extension of that. I mean, one's a non-voting node, the other's a voting node. Mm-hmm. Pretty similar. A little bit different on the biz dev side, but tastes like chicken on the back end, I'd say.
Right. That makes sense. It's always interesting to me because I've done so much work with so many validators trying to explain why it makes sense to kind of put that investment into our chain, right? So like when you're looking at chains, I'm sure every project comes and wants you to do validation for them. Like, what are the type of things that you're looking for, maybe even not even on a technical level, right, that kind of drive your decision-making around kind of where to invest your resources?
Yeah, I mean, it's a good question. So for us, it's, running validators for a new chain, a new protocol is a major commitment. And so we're thinking about it in terms of, who do we want to do business with for the long term? And so that can be a new blockchain. So we're running validators not only on Solana, but also on Avalanche, Plume, and a few other chains, Canton. but also with protocols like Zenrock. And really kind of the common denominator is we're excited for the future of what those teams are doing.
Right. Yeah, it's a really interesting time. I think we're seeing all sorts of different chains come about. Like we've been talking a lot about, even this emergence of like the more corporate permission chain, something that we kind of saw in the past, and then I think it went away for a few years. Like it didn't exist, and now it's kind of coming back again. So how do you think about the future of these different chains, right? Like especially when you think about like the different levels of permissioning, the different levels of openness, and kind of how it all fits together in the medium term.
Yeah, I mean, so we work with a ton of different blockchains, probably maybe 10, 15. And I got to say, I think it's probably the most ambitious thing you could do in business, right? So if you think about like a network effect business, like say Facebook or something like that, not only do you need a community if you're going to have a blockchain, but you need an economy, you need institutions, you need retail, you need traders, you need kind of complexity at, dozens and dozens of different levels, which I think is incredibly difficult to pull off. So I think that it takes a lot of money and a lot of time as kind of the just table stakes. So I guess, I know Stripe's new chain is going to be coming out soon. I think it's just a question of how much patience do they have? How much money are they willing to put behind it? Like if you look at the early days of Solana, the capital that was going into that chain, over an extended period of time was just insane. Like even if somebody like a Microsoft, maybe not today, but a few years ago, were to try to replicate that, it's a lot of capital.
Right. And you've been really at the ground floor since 2021 in terms of hiring talent, capital, and also just infrastructure for many different chains. I mean, starting with Solana, but curious generally your thoughts on how to hire top talent. You mentioned that you used to interview people coming from Diem and other more institutional like blockchains, but curious to hear your thoughts on how you have grown your team to really focus on a North Star mission over the course of the next 5 to 10 years.
Yeah, I mean, so our philosophy on that has always been that A+ people like to work with A+ people, and they don't like to work with anybody else. And so, especially on the engineering side, we focused on how do we hire, the best people. So the first hire was incredibly important. Second hire was incredibly important. By the fifth or sixth hire, they're kind of hiring each other. And I think you're doing it right when you can kind of take a step back and let these teams build themselves. But I would say that looking for drive, and I would say, I mean, it's maybe a little cliche, but it's easy to not do. So drive and passion for what you're doing, or just winning, I think is very important. And without it, you're not going to get very far.
Yeah, it's interesting. It's like, the classic case of like, is it the person who has a ton of drive and passion, but maybe doesn't have as much domain expertise versus like the person who knows a lot about it, a specific thing, maybe the exact task that you're asking them to do out of the gate, but just doesn't have that spark. I feel like
we like the spark.
Yeah,
we tried both. We like the spark.
I think that's right, because I think it's a lot easier to teach the domain expertise, especially if
you pick it up so quickly if you're passionate about kind of getting to where you need to be.
And crypto is still so small. Blockchain's still quite small in terms of the emerging subsectors that are growing. So there's so much room to really grow, especially if you're a 21 or 22-year-old coming out of college. Like you could really drink from the proverbial fire hose and really make an impact if you just spend a lot of time there.
Yeah.
That's something we've had a lot of success with, is hiring ambitious people who maybe need to pick up a little bit of domain expertise. And what we'll do is we'll give them a big, ambitious project that, if it works out, is huge for the company. But if it doesn't work out, is just maybe a little bit adjacent. Right. So kind of push them off into the deep end. And I think it's worked almost every time.
Mm-hmm. Right. No, it's very interesting. I'm wondering also, just going back to it, like you guys, I mean, you took such a big bet on Solana very early, right? And I'm sure that you felt like a genius and was going straight up, and then it crashed, and you're like, oh, I'm an idiot, and like, I guess maybe it'd be interesting to just hear like the history of how that evolved and how you guys can kind of decided to stick with it for all that time.
Yeah.
And obviously come out the other side and, rewarded massively for that commitment. But just, thinking about like why and what drove those decisions.
Yeah, well, I mean, so there were a lot of things about crypto that I didn't know. Like I didn't really understand how the culture worked, how the community worked, almost kind of how the economy worked. But so for me, I just spent a decade doing, lifts and shifts. So moving on-prem companies to the cloud, things like that. And so I figured, okay, well, if I'm going to start a company, I want it to be in, kind of on the next frontier. And so basically the idea was that, crypto is the new internet. First there was Web 1, then there was Web 2, and then there was Web 3. And if that's what's driving you to start a crypto company, back then, and really kind of even today, Solana was the only choice. And so it didn't feel contrarian at the time. It just felt aligned with the thesis. And I didn't actually feel like a genius during the 2021 run-up. I actually felt very confused because you'd go knock on the door of these giant, what I assumed were giant companies, and nobody was there. And so it was like, they must be incredibly busy. And it turns out in hindsight, there really was nobody there for a lot of them. So that was a little bit confusing. Like I'd come from a background where the balance sheet balances. You talk to people and things added up, and for the first 6 months, 12 months, it didn't always add up. It was very confusing, and then it was very, very clear.
Yeah, I think it's interesting. Like going like on that point, it's like how many of these companies were just two super smart engineers in a room, and like all they're just like not really thinking about how they're going to manage their finances or anything like that, and then all of a sudden they're like have a multi-million-dollar business, and they're trying to be
or
like
billion
or billion, and like backing into like, oh my god, how do we figure this out? Which is just shows where we are still. Even.
Yeah, I mean, I think the difference is, people talk about the revenue meta today, but back then, genuinely, I think nobody had revenue.
Yeah.
Whereas today you have, teams of 2, 5, 12, making $100 million in their first, 2 or 3 months, things like that.
I mean, it's so true. You look at like all the protocols that have scaled up over the past 4 years, they weren't making any money like in 2020 and 2021. And now, Aave, Radium, right, Uniswap, right, all of them are generating upwards of $60 to $80 million a year annualized because of the way that the entire on-chain ecosystem has evolved. There's real money coming into the space now, and in DeFi, and it's not just like speculation. I think the use cases that have emerged in terms of borrow lend, in terms of like DEXs, have really transformed the way people think about crypto and deposit capital into the on-chain economy. And Solana is really a home for that, right? In terms of being kind of the next NASDAQ, the next NYSE, it really is transforming into this place where assets that are coming from the traditional world or that are core to the on-chain economy are really sitting and being traded every day. And I think they've just continuously optimized for their infrastructure to be fast and cheap, which is so much more efficient than other chains that exist there. And I'm sure you see that all the time being a validator. You see, things with other chains that are a little less more efficient and performant than Solana. And we've also seen that as well with Zenrock, very much a Solana aligned company. We brought obviously Bitcoin to Solana with zenBTC in a massive way and continue to scale up that product with Camino, which is kind of acting as the Bitcoin bank. But not only that, but also we've brought over our native token Rock from Cosmos to Solana as well. And we saw a massive increase in trading volume and liquidity just by bringing that asset over because other chains don't necessarily have the same amount of liquidity and volume and momentum and network effects as Solana does right now. And I think that's really the main point, for a lot of these chains to grow over time. You need to have and build Lindy and network effects via liquidity.
Yeah.
And that's the main driver for a lot of newer assets to come to Solana, but also newer entrants into the market.
No, I think that's right. I mean, just going back to the beginning of the conversation, buyers want inventory, sellers want liquidity. I think that's why you see these episodic monopolies across crypto. OpenSea had it, Magic Eden had it, Pump Fund has it, Solana has it. No, it's incredibly powerful. Yeah.
Well, on that point, more from a business view, I've always thought it was tough for some crypto projects to maintain their market share and maintain their moat. We've seen, a lot of perps protocols that were first to market, like DYDX, like GMX, but get absolutely demolished by Hyperliquid recently. And even with some of the projects that you've mentioned, it's tough to maintain a moat. It's tough to maintain liquidity because the user behavior in crypto is very fickle-minded, and attention is really a commodity in the sense that it needs to be maintained, right? And I think as a validator in the space, how have you seen that evolved over time, especially as you get newer chains come onboarded and you onboard new chains?
Well, so I mean, the rise of Hyperliquid has been shocking. I saw last night, I can't remember if it was net income or revenue, but I think on a run rate basis, they've flipped NASDAQ already.
Yeah, I saw that.
Just ridiculous.
Which is
also by market cap as well.
there
right?
you go, yeah.
NASDAQ's market cap is 0.9 billion, and Hyperliquid's about to flip that.
Yeah, so that's it's crazy. But I guess the question is how do you hold on to that? And I think that like back when we started in crypto, a lot of people were trying to get a ball rolling that over time would become the next thing. Whereas today people are focused on basically like industry, like making revenues, bringing real world assets on chain, things like that. And I think that as that happens, the teams become more and more professional. Mm-hmm. And if you think about like what's the role of like a management team of a large organization, it's kind of to hold on to that really strong position.
Right.
And I think a lot of teams that have had that in the past maybe haven't had the DNA around keeping it.
Mm-hmm.
Yeah, I think one thing also that's just really interesting about crypto, I guess, and it's kind of obvious, but like if you were to take an example like a perps protocol, I know that doesn't really exist in the old world, but just for example, like you would have to go through a massive KYC. You'll have to connect a bank account. You'll have to do this, and this. It'll take 3 days to settle the transaction in or out. So like, let's say there's a different perps protocol that has like slightly better like rates or slightly more like potential for economics in any sort of a sense, whether it's an airdrop, whether it's, just slightly more liquidity, whatever it is. Like in kind of the old paradigm, in the old world, you wouldn't just switch for like some tiny amount. But in crypto, it's like, why not? It's so easy. There's nothing holding you back, just move assets over and just start trading there. And I think that's why like perps in particular has been such a difficult kind of thing to maintain. And we were speaking on our last podcast about this idea of like these perps protocols, and I think Hyperliquid's doing a good job of this, and I think Drift too, like of kind of starting to build the whole community around the base perp product and not just assume that, hey, we have a really good product and people would just use it forever, because, I think we're all saying the same thing, which is that if you just kind of hope that that's going to happen, like you'll get crushed by someone else who does it slightly better or promises an airdrop or whatever it may be, and kind of get left behind.
No, I think that's right. And one thing that's great about crypto and kind of always has been and hopefully always will be is there's so many more levers that you can pull. So things like points or airdrops or composability, starting out centralized, ending up decentralized, starting out decentralized, whatever you want. That I think makes it much easier to attack. And so, an interesting example, we've been working closely with the DEX that recently launched, not on Solana, and they were able to get a huge amount of market share very quickly. And one of the things that they did well was identifying basically places where there weren't, basically pairs where there wasn't a lot of liquidity relative to volume. And so by, pushing liquidity into those pairs, you start this kind of snowball effect.
Yeah.
Which has been super interesting.
It's interesting, and then you're pretty much playing the aggregator game, kind of.
Exactly. Yeah. But then the aggregator game turns into the yield game, and
it just rolls downhill.
Exactly.
Yeah.
Exactly.
You can definitely see that domino effect happen when you increase liquidity, right? And that's the main point with DeFi, and that's what we've learned with zenBTC as well. On more of like a foundational liquidity perspective, and having those network effects evolve over time for an asset opens the door up to many different use cases, which we're really excited about, especially going into more of the borrow lend use cases for Bitcoin on Solana. We're going to launch a partnership with MarginFi coming up relatively soon to finally enable Bitcoin as collateral, zenBTC as collateral on Solana. So that's going to eventually open up the door to newer use cases as well. And then once we fully optimize our yield for zenBTC via our custody fees, that could open up the door to Pendle-like markets, right? Or things like RateX, which we're pretty excited about as well. But I'm curious, as a validator, some of the things that we've been seeing more recently is how validators have a pretty big impact on governance and like DAO structures. Curious how you've seen that evolve over the past 4 years of being in that business, given that you guys ultimately do own a solid amount of stake, right, and within the native asset.
Yeah, I mean, we always try to play nice, and just kind of figure out what's the social consensus, and is there a crazy reason to be against it, and if there's not, then we try to go with the flow.
Yeah,
maybe that's a little bit too pragmatic. But no, I mean, it's interesting. I mean, I'm sure you guys saw there was like a stablecoin vote last night that ended up being very controversial. So we do our best to stay out of that. We learned those lessons very early on. So
yeah, it is really interesting, right? Because I guess just at the most fundamental level, like those who stake to you give you their vote.
Yes.
And that is just how it works, right? And you're not here to be probably an activist, but it is maybe an interesting thing. I don't know. Have you ever thought about does that go in the medium term? Maybe not today. Does that go into who people choose to stake with as a decision point? I don't even really think it is that big of a decision point in equities, but kind of became a thing a few years ago when people were like, oh well, these companies are voting for this, and this, and we can go to this other guy who maybe gives you the same ETF but votes a different way. I don't know. I don't know if that is something that has ever came into your mind space or.
Yeah, I mean, I think that maybe you could spin it as a selling point, but I think there are other selling points that are maybe easier.
Like the money?
Like the yield. Yeah, like yield, security. But I mean, I think it's I mean, if you look at the equities world, there's a huge business model, like a long tradition of activist investing.
Yeah.
There's probably, I would guess it was probably never more than 2 or 3% of equities, if that. But a lot of people made a lot of money from it.
Yeah.
We've been saying for a while, kind of just at a theoretical level, when is someone going to come in and just start buying a ton of tokens quietly and become an activist? Like the first real crypto activist. It's never happened. Someone just kind of slowly starts accumulating a ton of tokens from a bunch of different wallets and then comes in and be like, I own 15% of this. This is the direction we should bring this in.
So I've actually thought about this a lot, and people talk about are token securities, are they not? I think generally the consensus is they aren't. I think if as you think about governance and things like that, I think you have to keep in mind that oftentimes these are not securities. And there's things that they call it a security for a reason. And so I think teams have a lot of flexibility to.
Why don't you think they're securities?
Actually, hold on. Let's maybe we'll cut that part out. But just for the three of us, it's much easier to get fucked on a token than it is on an equity.
Yeah. No, definitely. And equity does provide that structure of ownership from more of a legal sense, which tokens, because of the the previous administration, just hasn't had any sort of structure to it, right? And that legal ownership aspect was never actually written down in paper. And that's why a lot of like projects that have launched over the past 4 years have had very like obscure legal structures and ownership structures, and they've had like 10 to 12 entities that had to be created in various jurisdictions. And you know, it's an issue in the space, and I think ultimately what needs to happen is that they just need to turn to one entity. And all value either accrues to the equity or all value accrues to the token. And you know, it's really interesting to see that evolve over time, because a lot of projects that have like actual running businesses are still like dealing with that in the background.
I think unfortunately a lot of the rules that were put into place to attempt to protect theoretically investors has ended up really hurting them. And I mean, I think you could we could all rattle off countless examples of this. You don't need to name names, but you know, I think that when we try to sit and think about it from like a first principles perspective and be like, what is this going to look like in like 10, 15 years? Obviously no one knows, but like, it's definitely not going to have like weird kind of dual share class vibes that don't really make any sense. So
I do think ultimately, like, I'm warming up to the idea that DAOs are going to be a very important part of a crypto project's future. Sure. I think historically the amount of attention that was put to it was not for the right reasons necessarily, and I don't think the token holders' best interests were in the future success of the protocol. But that being said, you know, I do think they are very important, and that is, you know, on the lens of like democratizing like ownership and having a say to an extent of what the protocol should do. And maybe that has to do with economics, maybe that has to do with future protocol changes. But I also think more from like a 10,000, 20,000 foot view, like having a nice like forum of all of like the ideas and all of the thoughts for the protocol, even if it doesn't get accepted or is kind of just like, you know, you're talking about the business and the protocol changes is important, right? And like that's how Bitcoin started, right? Bitcoin started in the Bitcoin forum, and they were just talking about like economics, different changes in the consensus, different changes in the code, and that's really important to like have that level of, you know, thoughts and network effects amongst like, you know, different individuals who are contributing to the actual business.
I mean, I bet you if you were to like graph like all the chains, like, you know, essentially like success versus like how active their forums and like decentralized governance is, like you would see a super linear relationship, right? Because it just, you get great ideas rising to the top the more people who are involved. It's obvious. And it's something that I think as we continue to grow and think about like what does Zenrock look like into the future is like a big topic of like how can we kind of structure everything, align everything in the best possible way to like build the future that we want in this kind of new world where, you know, maybe we don't have to worry about the SEC suing every single crypto company in the universe for the rest of the time. You know what I mean? So I think it's really interesting.
Yeah, no, 100%. I mean, I think the other thing is just as the space industrializes, like it's, you'll have more sophisticated actors who are involved with DAOs, you know, and just as protocols mature, like obviously Bitcoin is like a great, you know, contra to this, but you know, as you know, it's if you've got a borrow lend protocol with $1 million of TVL, it's hard to run that by consensus. But if you've got, you know, something huge, you know, maybe it makes more sense.
I also would go back to this idea of like, you know, maybe at super scale, like when you get to like a Solana type level or whatever, like you can get to a point where like essentially every decision is made by a DAO, right? But I also think that there's kind of like there should be and there needs to be a productive relationship between the team and the DAO. And it needs to sit in a structure that is like fundamentally aligned so that the DAO doesn't have to think as hard about like, well, can I trust the team? If the DAO can't trust the team, then it's like, what is this, you know? And so it's like, if you can create that structure where it is more aligned, then the DAO can kind of delegate a lot of the responsibilities to the team. And I think that is like a very optimized structure for the future, where maybe like as it grows, as it scales, you know, it gets to a point where, you know, you have 1,000, 10,000, 100,000, a million users, like it's like, okay, now we really can just like be completely decentralized running under a DAO and kind of hit that escape velocity as a chain where it's like now you're just like properly a chain in a sense.
And on Solana, the SIMD process for validators has been really interesting to watch. I mean, I think, you know, like, yeah, I mean, it's you know, you've seen cases where it seems like validators have voted against their own economic interest in favor of the interest of the chain. And then you've also seen instances where, you know, kind of large voices, large holders have proposed things with a lot of, you know, momentum that, you know, that ultimately kind of the validator set has voted against. And so I think that's very interesting. And I think it's interesting to watch how that is evolving on Solana. You know, I guess things don't have to be perfect the first time you do it. If you do something and you get a little bit better over time and you have a long time horizon, then you're going to end up very good. And so it's been instructive, I would say, watching these things mature on Solana.
I think that's a really important point. And that's one of the reasons we also picked Solana to be the home for zenBTC. Just working with multiple teams there, we had a really good sense of that they're not really focused on just like short-term little initiatives. They're really thinking about this in the long run and constantly iterating on their product and their new features and different assets that they're going to onboard. And, you know, I think that's really the mission of Solana. It's like move fast, break things, come back to the table, come back stronger, get back up, and really think about, you know, how you could progress the overall state of crypto over the next 10 years. Yeah. And that really aligns with our mission of Zenrock, right? We're really focused, you know, over the next like 1 to 2 years to make, you know, zenBTC the canonical asset, Bitcoin asset on Solana. But that being said, we're really in it for the long run, 7 to 10, 15 years down the line of how we can really optimize and build multiple products that are better for the future of crypto. A lot of teams right now don't really think that way. And I think you've seen that usually in bull markets when, you know, fake founders come to the table and they're not exactly, you know, real in the sense that they want to build products for the long run. They're only there for, you know, a couple of years to kind of make a quick pump and sell out and go live in the south of France. But that being said, you know, I do think you're starting to see a shift in the way crypto founders specifically think about the future of their product because of the way crypto has really evolved over the last 18 months. I mean, with the explosion of institutional mindshare and assets and flow coming into the space, it's very hard to think about this in the short term now. 4 years ago, you wouldn't expect to see, you know, an ETF, the Bitcoin ETF being the most successful ETF in the world, right? Wouldn't see the immersion of countless DATs, right? Wouldn't see Solana being so successful. Wouldn't see the explosion of number of chains and number of use cases and borrow lend going to an all-time high. DEX volumes approaching all-time highs. I think the entire on-chain economy and the entire like more broader the mind share and the attention that crypto is seeing right now is never been in a better state.
Yeah, and I think being tethered to revenue really helps because you know if all you've got is a token and a narrative, you're going to lose track of the narrative at some point. The token price is going to go against you, and if you don't have some kind of grounding, it's you know, just from a distance, it's easy to watch people kind of get led astray, you know, feel like they can't come back. Whereas, you know, if you're grounded and people value the services you're providing, you just have much more control. And I think in a way that allows you to think about the long term.
I also think like one thing about crypto as well, like going back to this idea of like the fake founder, right? Like someone who's just trying to kind of get that pump and get out, not really build anything super interesting. It's like, has there ever been an industry where it's easier to like kind of juice numbers and just like pump things up? You know what I mean? Like there's mercenary TVL everywhere you look, right? It's not super difficult to find. There's, you know, you can get some dev shop to pump out 100 million wallets to do whatever transactions on your chain as many times as you want. but it's not real, right?
Yeah.
And like I think that there's this kind of beauty in like accepting that like if you compare yourself to those guys who are just juicing their numbers like crazy, like you're of course going to look way worse in the short term, but then like 2-3 years out, like those models are obviously unsustainable, right? You're not actually generating business. You're paying someone to make it look like you're generating business. So you're actually losing money where you should be making money, and you just eclipse them in the not even super long term. I mean, 2-3 years, right? Like where they start to kind of go super negative and they're just dumping and getting out, and like you're like really hitting your like hyperscale moment in a sense. So I think that we're really excited about that. We're still at least a year or two out from kind of where like that will kind of happen, I think, for us, since we're still like, just a year in. But yeah.
I mean, I think I'm going to butcher this quote, but I think Albert Einstein's got a quote that like compound interest is the most powerful force in the world. Yeah. And so I think if you're genuinely compounding and somebody else is not, it might, maybe not 3 months, maybe not 6 months, but it's just a matter of time until each one of your kind of compounds is, multiple times larger than they are. And
right.
So you can't, there's a lot of things you can fake, but it's hard to fake, that kind of compound
100%.
Growth.
100%.
How do you see more on like the validator side of the business? And, I think there is a lot of like competition for yields generally in the space right now. When you look at like what Aave has been doing, a lot of users don't really want to necessarily put capital to work on the staking side. They may get better yields on their stable coins via, a borrow lend, maybe some institutions as well. So have you seen that change at all in terms of like staking yields fluctuating over the course of, 2 years?
Yeah, I mean, so what's interesting about Solana is that there is a degree of variability in terms of yield, and the better you are at running the validator, the higher yields can be, which is not the case on a lot of different chains. And so I think that has been an interesting dynamic. And so basically figuring out, like if you think about it, there's some economics that are baked into running a validator, but there's a lot of value that's created beyond that, and that can be monetized in all sorts of ways, and then that can be shared back with stakers in a way where yield is higher than it would be naturally. So we're not like seeing flows away from validators towards things like that. But we are seeing, basically people are very sensitive to what are you doing? What are you doing? How are you doing it? And what does that mean for them?
Right.
I think also there's been a lot of hidden fees and things like that on the validator side, which, the most surefire way to have a higher return is, obviously higher yields, but also, lower costs, right? So like, tax planning or just expense ratio planning can go a long way.
One other topic that I'd be really interested to get your take in is like, when we look at Zenrock and what we're trying to do, right? Like we are a purpose-built app chain. Like our goal is not to become a generalized blockchain by any stretch of the imagination, right? It's to say we can do this one thing, which is really DMPC security and cross-chain signatures really, really well in a completely decentralized way. And that's what we want to do and enable anyone to use that to build where they want from where they want. And to do a whole host of really interesting things, including obviously zenBTC being able to access the Bitcoin blockchain directly without any kind of necessary intermediaries or anything else like that. And also like our decentralized custody token standard to move all assets around under one centralized custody framework. But I guess the question is like, how do you think this idea of like an app chain will evolve into the future? Like, will it all just be just general purpose blockchains, or do you think there is a place for a lot of these kind of siloed, purpose-built chains that do certain things really well and don't try to be like everything to everyone?
Yeah. So this is my current theory. It changes as the facts change.
Right.
I don't think that there's going to be a lot of general blockchains in the future. I mean, it's like how many Facebooks are there? Who's the next closest competitor to Facebook? I think they're in a totally different line of business, right? And so I think that there will be a very small number of, mega winners on the general blockchain side, and then I think there will be a lot of basically app chains that interact with those general chains, are composable, et cetera, et cetera. And you're kind of already seeing that today. I mean, I think you're seeing dominance consolidate, across the chains, and I think you're seeing app chains, which I think you could call Hyperliquid's per
I think
product,
you can 100%.
an app chain, still thrive like nothing we've ever seen before. And I think the future is going to look more and more like that. So maybe 1 or 2 or 3 winners on the generalized side, and then as many as possible on the app chain side.
I tend to agree with that a lot. And you're already seeing that come to fruition a bit with all of the layer 2s that launched over the past 3 years. Many of them are shutting down, unfortunately, now. Because they just haven't been able to find any sort of product market fit. They haven't been able to find any product really, right? Yeah. And that is the main thing. Like, you need to come out to market with a product. You can't just hope that someone's going to build on your chain because of whatever a highly technical solution that you bring to the table. And I think you're starting to see a lot of teams now that have built, pretty good infrastructure from a blockchain sense, build products internally to support a future vision of their infra and support builders to come in and build on their chain because they could show the success of this product that they have built internally. Yeah. That's kind of what we've done too with Zenrock, right? We came out the gate saying, hey, we're not going to just hope that someone comes and builds on ZR chain. We do have some really interesting qualitative and technical aspects of the chain that are quite unique compared to other chains. But we came out and said, hey, we're going to show that you can do a lot with this chain via zenBTC and control multiple keys on multiple chains and ultimately get your goal of whatever. But I think that's very important, especially to prove out the early network effects and Lindy and liquidity of the chain so that developers and projects could come and use that, right? And develop use cases from that initial foundational liquidity. Yeah,
I mean, I think when you're trying to solve the cold start problem for a network business, I think anything goes. I think, for, was it for Reddit? I think they went out to Dolores Park in San Francisco, and we're just getting people to sign up randomly.
Same with Venmo in New York City.
Yeah, we actually, speaking of which, we've worked closely with Ikram. For a long time.
Their story is really, really interesting on how they scaled up. Right, they were literally in Times Square giving $5 to every person that downloaded the app, and they would be like, "You want $5? Let's send it to you." Digitally.
Was that Venmo or Jelly Jelly? Because it might have been both.
Well, a lot of comparisons with crypto projects and how Venmo got started out. Same with Reddit, right?
Or even PayPal. I mean, like starting out as like a cryptographic standard and ending up powering eBay, I guess.
Well, even all the gambling sites now, right? DraftKings and FanDuel will give you back $100 in terms of free bets if you just came in and used it.
Yeah.
Then people get addicted.
That's the other
dopamine. Yeah, dopamine's a powerful force in human society.
Pump.fun knows a little bit about that. I think.
Well, hey, global casino never ends.
That's right.
But yeah, I think it is interesting. Like, people be like, oh, like airdrop meta, whatever. Like, who knows what will happen with the airdrop meta? We've talked about this. We're thinking about like the best way to kind of optimize our airdrops to kind of actually get value from them to us. Like, I don't think that. Like, I think the worst thing you can do is just like create some sort of a thing where you only attract low quality farmers to just create as many wallets as possible and just farm the hell out of you. We've seen that countless times, but finding ways to like create high quality users through airdrops is a really, really powerful tool if you can use it effectively. It's not new. To you guys' point, right? Like, this has been happening in the traditional world forever in various forms. It's never called an airdrop, right? But it was that, right? DraftKings giving you $100, it's an airdrop, right? Sign up and you get an airdrop. So yeah, I just think it's interesting as like kind of crypto maybe has the ability to create like a perpetual ongoing airdrop for its users to share economics in a way that's differentiated than like traditional business models to drive usage. And I think we're all figuring it out in real time, like the best way to optimize for that. And I think better models will just continue to rise to the top.
Yeah, I mean, it is interesting. I don't know how closely you guys follow Axiom. But I think they've recently rolled something out where you get money back the more you trade, which is funded by the fees that you're paying from the trading. But that seems to work well with the human brain.
Yeah.
Well,
Exactly.
DYDX did that as well for the longest time, where you get USDC rebates based on the amount you trade, and same with OKX and centralized exchanges as well. So I think that will continue, and that trend will definitely continue. It's very important to give back money to the people that are using your protocol, but it has to be done in a very sustainable way, because you've seen the opposite end of the spectrum where a lot of protocols just keep on giving away their native token in an unsustainable manner in terms of incentives or in terms of trying to bootstrap the foundational liquidity of like an asset. And time again, the chart is just down only. So you have to do it in a way that if you're making money, then it's another story, right? And distributing back some of the money that you're making back to users is something that is organic and sustainable. But if you're just doing it via emissions of the native token, then it can end a little poorly. So
For sure.
trying to find the balance between how to do that, if you do that, how will it impact the long-term success of the business and not really think of the short-term? Because once you launch a token, you have to try to make that token as sustainable as possible, especially if you're in it for the long run, because that's one of your best marketing tools at the end of the day. And once people see the price going up, the chart looking nice, they pay a little bit more attention to your project. So got to figure out what the best balance is.
Yeah, I mean, if like an airdrop done wrong, if you believe in your asset over a 10 or 20 year period, it's got to be the most expensive thing you could ever do. I mean, it's insane if you think about it.
It's so expensive.
Yeah.
It's like multiple financing rounds.
Exactly.
That's just like, let's see what happens here.
That's also like thinking of like, okay, like build it and they will come type of mentality. Like you're not really thinking of like the end first when you're doing that. You're just thinking of like the historical way that a lot of projects have done things. But I think one of the things that we're really focused on at Zenrock is trying to break the norm for how projects bootstrap initial liquidity and bootstrap users. And that might be in some unconventional ways, but hey, we're still in this phase of experimenting of what's right and what's wrong, even from legal and entity and structure way, right?
Yeah.
Things are very much in this evolving state of figuring out what the best route is.
Yeah.
Yeah, I think we're at a cool time where we just go back to first principles. Honestly, that's what it is, right? And think about how should this work? Like, how should we do this as an industry, right? And we're trying to make the changes that we can to get to there as in a way that works for everyone.
Yeah. No, it's interesting. People talk about like, every year crypto adopts some concept from Web 2. So like this year it was revenue, and like maybe next year it'll be customer acquisition cost or whatever. But there's all of these learnings from the last few hundred years of business. I feel like many of which have been ignored, maybe for the best, but I do think there's a lot of wisdom out there that has yet to be applied.
I completely agree. And many sectors also within the traditional world that may be more efficient under crypto rails that have yet to come to the on-chain economy. So it'll be really interesting to see how it evolves over the next 10 years.
No, that will be interesting. But I'm sure you guys saw Inversion Capital just announced their raise, but then also I don't know how closely you guys follow Avalanche, but they've got a job posting for an M&A lead.
Yeah.
I think we have something like that in mind. So
token M&A might be a huge thing, right?
Yeah.
It won't be just equity swaps. It could be just buying out the entire token supply, right?
Yeah. So excited for that to, I think, take on more. I mean, we're talking about like, are there other industries like this? I think oil is kind of an interesting one where, when it started, anybody could make a lot of money very quickly, but there's like boom and bust cycles, and so you could lose all that money. But then after 15 years, if you didn't have a professional approach, you couldn't exist.
Right.
Interesting. Yeah, I think that's right. I do think it's just one of the funniest things, but it's so true that it's like, yeah, it took us like 17 years as an industry, 15 years to decide like maybe revenue is something we should adopt as like a principle.
It's crazy.
One other question I think that is interesting is like from your seat, what do you think whether it's in your validator business and any of your other lines of business, is like one thing people just like fundamentally misunderstand about one of your business lines?
Yeah, I mean, I think for everything we do, I think relationships are actually like incredibly important. We were talking about earlier, how do we think about where we're going to run validators? And the answer is places where we want to have relationships. And so a lot of what we do is, incredibly technical. It's about what kind of servers are you using, like what is the speed of light from one location to another location, things like that. And so on one hand, you have these insanely technical things. On the other hand, you have relationships. And I think they're actually both equally important. So I'd say that on the kind of the operations side. And then in terms of how we think about the future side, I think the winner takes all dynamic across any part of crypto where you have a network effect, I think is going to become increasingly important over time. I think these episodic monopolies are going to turn into just structural monopolies.
Yeah, super interesting. I agree with that. I guess, final question as we're wrapping up is like, when we look, 12 months into the future, right, as an industry, what do you think is maybe 1-2 trends that are going to be, everyone's going to be talking about that today no one's speaking about or thinking about?
Midterm elections. For real though, I think the midterm elections are going to be super important. Beyond that, I mean, well, I guess it's hard to think of something that people aren't already talking about. I think the DATs are going to be very important. One way or another. I think it's either going to go very well or it's or not. But either way, I think it's going to be very important in 12 months. So
I agree with that. So I think we can end it there.
Yeah. What could go wrong with buying a ton of crypto assets on leverage?
History tells us this is going to work very well.
Exactly. So. Exactly. All right. Well, thank you so much, Walker, for joining us.
Thank you. That was awesome.
Yeah.
Of course.
Thanks.